Welcome to Gaming Fin, your channel for everything related to the gaming industry and the financial markets. And you see here the CNBC. This is the CNBC big news, and it's very recent, so 30 minutes ago. Electronic Arts is cutting about 800 jobs or 6% of workforce and reducing the office space. So Electronic Arts said Wednesday it's laying off 6% of its workforce and reducing office space. Here are the key points. So I'm putting you a link to this article also down below in the description of this video. And CEO Andrew Wilson wrote in a note to employees, as we drive greater focus across our portfolio, we are moving away from projects that do not contribute to our strategy. So here we go. This is the note, so I can read this. So I can never read those articles of those news sites, so you understand this, but we can read the main source of Electronic Arts. So I'm not invested in Electronic Arts, my friends. I'm not a financial advisor. I'm a YouTuber, retail investor. This is for information and especially entertainment purposes only. So let's go through this, my friend. Let's go through this. But before we go through this, here we have to also take a look at the chart. So this is the chart of Electronic Arts on TradingView. I was also drawing a Fibonacci retracement in it. So if we consider July 2012 as a good point of the bull market in Electronic Arts to have started. So, and also you see actually the trend line is amazing. So we were falling a little bit under the trend line, and immediately we jumped above it again. So this is very interesting to see. I know Electronic Arts has let's say a lot of gamers were extremely angry about this company back in the days, but they still make money. It's still a company that is that also it still is a stock that works fine. So we really have to keep this in mind. So after hours also 0.70% up. So let's jump to the letter, guys. I know you want to hear this, so of course I'm also putting you a link in the description. So team. So I'm also going to comment this. So I'm not just reading it, so I also comment this. As we near the end of the fiscal year, I'm writing to share an update on our business. Even amidst macro uncertainty, EA is operating from a position of strength. So looking at the stock price, yeah, not bad. Our business is gaining momentum here we go. It's gaining momentum as we continue to deliver high quality games and amazing content across some of the largest, most beloved franchises in the world. At the heart of global football culture, EA Sports FIFA 23 is pacing to be the biggest title in franchise history. Wow. I mean, they make a lot of money with FIFA 23. Sometimes I think this is actually the only game they make this kind of money. So Apex Legends, of course, we also have Apex Legends. Performance is strong and on the heels of a memorable 4th anniversary event. So do you remember when Apex Legends came out? So I think we were 4 years ago. Yeah, we were around here. And after Apex Legend came out, I think we were here at $88. They went really berserker. That's pretty impressive. And The Sims is fueling imagination and engagement across the passionate community. We are leaders in a dynamic industry with new audiences, new technologies, and new media trends, fundamentally reshaping the world around us. So this says not a lot. So this level of transformation creates powerful opportunities. Now more than ever, we must be focused on our strategic priorities. So now it comes. We must be focused on our strategic priorities. So that's very important. What are the strategic priorities? So building games and experiences that entertain massive online communities. So you see, it's a massive online community. So we have two important words. We have online and we have massive, so big online communities. So is it really that do they even consider the solo offline gamer still interesting? Question mark. Creating blockbuster interactive storytelling, that's good, and amplifying the power of community in and around our games with social and creator tools. So all about social and creator. Here you can see it. These priorities align our investments with opportunities to make the biggest impact. So it seems they are looking forward to make even more online games with even more social and creator tools. So, what does this mean? A lot of people like their Sims, a lot of people like their Apex, their FIFA, but Electronic Arts also makes other good games. So also I like, for example, their racing games since they bought Codemasters. As we drive, talking about racing games, as we drive greater focus across our portfolio, we are moving away. Oh, whoa. We are moving away from projects that do not contribute to our strategy. So they are moving away from projects that are not contributing to the strategy. Here, massive online communities, blockbuster interactive storytelling, and games with social and creator tools. So now they say we are moving away from those projects. Reviewing our real estate footprint. Okay, I understand this. So the real estate footprint has nothing to do with gaming. So obviously if they are licensing people, they don't need so much space anymore. And restructuring some of our team. So yeah, that's always that. I don't see this so negative. Restructuring your team. I mean, this makes sense for me. If you're shrinking a little bit to because you are facing also a recession as a gaming company, this makes definitely sense to me, guys. These decisions are expected to impact approximately 6% of our company's workforce, so I'm very sad for them, honestly. I mean, it's never good if you lose your job. This is the most difficult part, and we are working through the process with the utmost care and respect. Good to hear this, and I like that. Where we can, we are providing opportunities for our colleagues to transition onto other projects. Where that's not possible, we are providing severance pay and additional benefits such as healthcare and career transition services. Communicating these decisions began earlier this quarter, and we expect them to continue through early next fiscal year. So concentrating more on massive online games, less real estate, and kicking out people. So that's what I'm taking away for now from this letter. I want to extend my deep appreciation to all our employees who have contributed to our incredible story so far. It's through your love of games that we continue to deliver on our mission of inspiring the world to play. Looking forward, we are focused on writing our next great chapter by bringing more amazing games to more people around the world. So yeah, I want to see this. Yeah, more amazing games, guys. Inspiring them to build community, participate in shared fandom. So that's interesting. And have joyful experiences. So the future of entertainment is interactive, and no team is better equipped to lead this transformation than us. So, signed by Andrew, the CEO here, Andrew Wilson, the CEO. So I'm not invested in Electronic Arts, just saying this here, because I think they're actually not that cheap. They're not that cheap, guys. They're not that cheap. But overall, this chart looks incredible since 2012. From $10 up to, on the top, $150, and now we are even back in $120. So I like the chart. Is it a company I buy now? Nah, I'm not going to invest in Electronic Arts. I like some of their games. However, this stock is, for me personally, too expensive, and I don't really, and here seeing also the trend line, I don't know really where more upside for the stock is. So I'm a bit critical on this aspect. But hey, I'm not a financial advisor. I'm a retail investor, and a YouTuber, so don't listen to me, guys. So I told you, don't listen to me. Probably you lose all your money if you listen to me. So thank you very much. See you next time. Bye-bye.